When you say non-target school, you mean like not an Ivy League school?
Yeah.
Go for people that are not 100% focused on credentials. Start with the VCs that themselves didn't go to Harvard or Stanford. Number one. Um, Number two, most people understand that when you're hiring a Harvard MBA, you're getting a credential and you're getting like training and case studies. You might not be getting as much grit and not necessarily, but like, there's a path that people select. I'm not against MBAs. I tend to weight grittiness much more. And at UMass Amherst, which is where I went, um, I just found that in spades everywhere, all the time. And the variance of human intelligence is not all that high. Like, I don't think you're smarter if you went to Harvard than if you went to UMass, than if you went to UConn, than if you went to anywhere else. Like, all your personal and financial and legacy, like, the more we learn about that, the more we see that people are sort of creatures of their environment. So just like go to people that are not obviously into credentials. They're telling you by where they went and what they post and all that, and there's tons of them. Um, if you're forced to, though, um, after school, you get work product, build work product, and then it doesn't freaking matter.
You're the type of person who, when something catches your interest that will make a huge impact, you dive right in, learn everything you can, absolutely crush it, and get invited by others to expand your expertise. Your ability to manage capital has led you to become a general partner at Tribe Capital, which has 1.8 billion in assets under management. Boris, welcome to the podcast.
Thank you very much. Happy to be here.
Let's go back to the start of your journey. What was your first real exposure to venture capital?
So I'm 38. My first company I started was in 2007. Back then, even though the Facebook era was just getting started, venture capital was not the first thing a founder in Boston would think about. And so my first exposure to VC was when our company was already growing and we needed, $200,000, $300,000. We needed a very small amount. Today, that would be smaller than a pre-seed. And we went out and talked to some angels, and a lot of the angels basically said, here's 25, here's 50, here's 100,000. And I remember celebrating, when we had generated maybe the first $100,000 check. And it was years before we went out and raised venture capital. And by the time we had done that, we had a real business. And I think one of the biggest changes that I see today is so many people raising on pre-seed decks. And so they have exposure to venture capital very early, but it really transforms their business. So let's say somewhere around 2010, 3 years into our business when I first got exposure to VC.
Yeah, and that's the amazing part is that you actually had a real business before you even kind of interacted with, hey, we actually kind of need some funding right now. It's actually a need and not a want. So let's, go out and search for ways. And that's how you found venture capital. But most people these days, it's like, hey, we've got a great idea. Let's just raise it. And that's not really a good idea because you've not really found like product market fit. You've not already found like the people who want it. So it's really better to just like do it when you actually need it. And then you would find funding, you would find resources. So what you did there was just amazing. What was the moment that you really wanted to make the jump into VC? Was it the irresistible combo of game theory, computer science, and crypto?
Well, look, we started off as a couple of nerds, coding in a tiny office back in 2007, 8, 9, 10. We raised a little bit of money. By then, we had millions of users. This is the first company, Campus Live. And we went out, raised some money from fancy firms like Highland Capital and Charles River. I definitely remember the anxiety there. So that was our first real round. It was a Series A. I think it was 3 million pre on 6 million post. We sold half the company. That was like a big win. It's crazy. You don't see that anymore. Kept building the company. We sold it in 2015, started another company. And then in 2017, it was a couple years into the second company, and I was like, I don't want to do this. I don't want to do it this way. I want to do something different. This is sort of ad tech, then prop tech, communications software. Um, and then I saw crypto, and I saw the revolution that I thought was blockchain. And I just started writing personal checks and taking on advisory roles. I mean, thinking about being a VC was so far from my mind. I just wanted to help really early entrepreneurs figure something out and thinking maybe I'd do something myself. And then, about 40 investments later, I looked back at my portfolio and I met with some of my mentors and I told them what I was doing. And they basically said, look, this is venture philanthropy. It's not venture investing. You're investing arbitrary amounts. You're advising some places. You're not advising other places. You're not setting aside money for follow on. Um, you really need to professionalize this because you have great access. And so that's when myself and my partner, Julian, started working with Republic. And that was when I realized you can't just, this is about breaking into VC, right? You can't just jump into VC unless you have an ultra wealthy family, some ridiculous political connections. We see that in the industry. Um, Largely to its detriment. But then if you want to become an actual VC, and we'll get into that, you have to find the money and you have to find the deals and you have to do a lot of that yourself if you're going to do it out on your own. So we went and we basically said, we've got this operating experience. We're just going to do deal by deal. It's called co-investment or SPVs, whatever. And we just started proving to investors called limited partners that we had really good access that they couldn't find elsewhere. That was when I realized this was really fun, both the aspect of running a potential venture business and then also investing. That was my very first foray. That was back in after my angel stuff in 2018, late 18.
Yeah, and that's like the coolest part because you really just like came into this after you had the experience. Like I said earlier, you really just like dive into things that has like a huge impact. And then once you go into it, you always just seem to crush it and you just like do so freaking well that everyone is just like, hey, you should do this. And your mentors are like, hey, dude, you've got these connections. Why not just do something with it, expand it, make it even greater? And that's exactly what you did. And on this journey, you're always like helping people. You're always like seeing like people who are in the past stages of the companies that you have done. And you're just like, oh my gosh, why don't we just like help each other so then we can all grow in this industry, in this space? I know that you also did, a blog called Game Theory Group, and you really just like got into the space where you were sharing tons and tons of thoughts. You were sharing your branding and you really created these connections in a way where it was something that you maintained very well. So, what are your methods for really maintaining relationships with high status people or really people who are extremely busy?
Yeah. Well, you got to give people a reason to want to talk to you. The prevailing theory is just people should say no to more things. And if you're just starting out and you don't have much to offer, you're going to get a lot of no's. And there's a little bit of adverse selection. The yeses you'll get might be the less, high quality yeses, because those are often people that are willing to spend their time and they're trying to do the same thing as sort of like work their way up the ladder. So you got to have something to offer. Maybe it's a podcast interview, right? Maybe it's internship. Maybe it's some analysis you did on a portfolio company of ours. Maybe it's an introduction, but you certainly have to start by adding value. That never changes because as you sort of grow your career, there's always someone more important, better, faster, richer, whatever. Like that never ends, right? And so whenever you're trying to get someone's attention, you got to have something to offer. For me now, that might be a $5 million check. For me, that might now be the advice or introduction to a bank or an auditor or like that. All changes what you're doing, and the quiver holds different arrows as you continue to scale. But like you got to add value. I mean, there is nothing less interesting to me than someone that sends me an email saying, "Hey, can I pick your brains?" No, you can't. That's like my whole job is people picking my brain, and this is essentially a side quest. So find a way to add value, and every single person can add value if they spend a little bit more time. Because frankly, I think most folks don't spend the time. They think it's owed to them, and that's just not true.
Yeah, and most people they think like sharing their thoughts online or even sharing their real opinions to people, even though it's like controversial or it could be like the good or bad stuff, you have to share it because there's people who have the same exact opinions. And when you have these loyal followers, it's even better than having like just 1,000 people who likes you rather than 10 people who really, really freaking loves you. And that's how you really make partnerships. I know that, Boris is someone who's a VC, so he has to say like no, 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 no to like so much founders, and he has to select people who is actually going to give him value. Talk to us about what is a typical day in your investment life.
Well, there's two sides to venture firms. From the outside, and I thought this for a long time as a founder, that, these folks were all powerful with a blank checkbook, able to just invest in a company if you impress them enough. And that, that couldn't be further from the truth. The truth is, a venture capital firm is a services industry. And we really have a client and we have a stakeholder. The client is our limited partner. It's the people that give us money to invest. And that can be very rich people for the small funds, all the way through to endowments, pensions, sovereigns, whatever for the bigger funds. And those clients are only going to allow you to use their capital so far as you have good performance, you're consistent, you're communicative, and so you can't just invest in, your friend's shop because you think it's so cool. You can't just say, "Oh, this founder's impressed me so much, I'm going to ignore doing the reference checks or the client." It just doesn't work that way. And where it does work that way, you tend to see those funds fall off a cliff. And so you have to have consistency. You have to have an edge. And so the first order of business in a venture capital firm is get the money to invest, set up your funds, get it going. So now you know who your client is. Then it's your stakeholders, the founders. Without founders, you don't have venture firms. And more importantly, the way you treat your founders will reflect down. And the network is small enough. The world is so connected. If you don't treat your founders well, pre, during, and after the investment, you're not really going to be able to succeed. And so what is the day? The beginning of the day is the fire alarms. And usually the fire alarms are founders having major issues that they think they need some advice on. You got to put that hat on first. That's your product. After that, it's for me, especially all the administrative stuff. Like we deal with LPs, we're planning for our shareholder AGM meeting in New York. All of that administrative stuff takes up quite a bit of your time, but it's to set your venture firm apart from others, to sharpen your edge, to build your internal product portfolio. But really, it's two things: administrative fundraising and portfolio support. And there is no set schedule because I sit on a whole bunch of boards. If at 2:37 p.m. a founder's having a major issue, he's going to pick up the phone, call me, or email me, and you got to drop everything. So it's less about like breaking out your day aside from the calls that are scheduled, but having a set of priorities. And for me, the biggest priorities I have are my stakeholders, which are the founders, my clients, which are the LPs. Everything else falls downstream of that.
Yeah, and you really, really do support them well because it's like when you're a VC, you just drop everything when the founder calls for support, and you're just like, hey, just tell me anything you need. Like, I'm here for you, I'm there to help you. Um, when it comes to finding founders or, just founders that you want to invest in, but they're like, oh, we're doing so well, we don't really need you to invest in. Um, for larger VC funds, is it a conception that you guys throw like lavish events and expensive dinners for founders to take the investment, or what is the truth?
Man, if there's a founder that cares about lavish dinners and events, I would run in the other direction. There are stakeholders, there's limited partners that want to have, much of what they're doing is allocating capital. There's other VCs. Like, there's nothing wrong with a little glamour here and there. I would say I'm far from the expert of that, but Founders are freaking gritty. Like sometimes they're dragging me into their, little dungeons and telling me about what they're doing. Even at scale founders. I mean, like 50 million in revenue, and he's got, drives an old Camry. It's not about that. I think the founders are very laser focused on building their business. They want to know what you can offer them as far as connections, introductions, advice, mentorship, and capital, and terms, frankly. Everything else is nonsense. Most of these founders, the ones you see flying around in fancy jets, they've already made it. They're not fundraising from VCs.
That's the craziest part is most people don't realize that even though you have like a higher net worth, you're still just a normal person. And I mean, Boris, he plays Call of Duty, and everyone plays that. It's like everyone has interests, everyone has hobbies, and when you really go into a bond with them with these hobbies, you can get access to these high net worth people. So they're really just like normal people, and it's whatever they want. Obviously, you would have to cater to, and that is a best way to do it. As you know, someone who's investing in founders, what is the top three things that you look for?
Yeah, it changes a little as the company scales. And the reason that it changes a little bit is the longer your company's been around, the more revenue it generates, the less of a focus it is on necessarily the original founder. And now you have to focus on them and the management team, and then eventually the management team and the other stakeholders, like other investors and stuff like that. So it does change. That said, I've got kind of three that I I believe are the most important, especially from pre-seed to sort of Series A, Series B. Team obviously first, and not just like are they awesome, did they go to Harvard, like none of that. That's not it. It's grit and focus. Like will they run through walls because they're going to have to, and are they focused on this to the exclusion of almost everything else, like laser focused, because human beings operate really really well, especially highly functioning ones, if they really know what their north star is. They wake up and go to sleep thinking about the same thing, and then when the hard times hit, are they going to give up? And I know the hard times are going to hit. I've been there. So that's team. Credentials, distant fifth. Go to market, second, is basically like, do they know their market? I'm a VC. I'm never going to know your market as well as you. Like virtually never. Even in my specific area of expertise, there's almost always going to be founders I speak to that should be educating me. Are they educating me? And do they know, or do they have a prediction of what will happen in the future? They must have that. And then finally, like if they know that, can they then pull the appropriate levers to grow? Because I'm giving them money. I don't want them to put in the bank, get an interest rate on it. I want them to spend it. And as they spend it, I want them to get more efficient in spending it. Can they do that? That's hard. They have to be able to tell me a story that gets to that endpoint. And then finally, the creativity of the business, not just of the founders. And I don't mean creativity like how well do they paint, right? Or all that. What I'm talking about is there is a challenging problem in front of them. And are they solving it in an orthogonal way to however else everyone else is solving the problem? Because if you're starting a business right now in 2025, there are 50,000 entrepreneurs. Thousands of people have thought of your idea. Hundreds have done it. Dozens have raised money. Why you guys? And it's got to be that you're approaching this from a way that others have not, that allows you to grow faster or be more efficient or get the right partnerships. And you have to convince me that you're creative with that. And that creativity scales over time. And that's when you look at a company and people are like, how did they make it? How did Facebook make it? How did Salesforce make it? And they always sort of like pick apart this one thing. And the founder is going to be like, actually, it was like a million things I did. But when you step outside, you can see that there's these like macro tailwinds that are pushing some of these companies from start to finish that are very creative and very different. And I want to see that. So if you can get me on team, on understanding your market and on your creativity, for a seed round, I'm sold. As you start to scale, I'm going to start to see traction because that'll prove those three things can be combined with like product market fit. That's what I mean as changes as it scales.
Yeah, especially in early stages, team is literally the thing that matters the most because, like Boris says, you need to have that obsession. You need to be following that tailwind, and you need to have that grit. It's like if you're not gonna consistently do it, if you're not gonna sleep and dream about it, and then do it right when you wake up again, it's like, why would we invest in you? We're investing in you because you have that potential, because you're gonna do something great, and because you're laser focused. So on the topic of who is right for founders, who is right for VC? Is there any qualities, experiences that they should have?
VCs come in all flavors, right? There's sort of like three buckets. One is the forget their credentials, forget what they're good at. They just know how to get money and have that money trust them to invest it. Okay? If you can do that, you're a VC. Congratulations. Okay? That means you came from a wealthy family or you're an otherwise like a phenomenal brand salesperson. The second branch is like the apprenticeship model, which has been around forever. Like you went to school, you got an internship at a venture firm, you did some operating role at some big public company or something, came back, as an associate, worked your way up as a principal, switched companies to make junior partner, whatever, like that track. That's what I call the financial VC, really. And then there's the operating VC, and that's you've just ran companies and you've impressed someone enough where they're like, you know how to run companies. Founders are going to want to take your money and you're going to be able to figure out their business and help them run it. Those are operating VCs, right? Really tend to make good board members. But like any one of those three can be really successful. Even the brand VC, because they probably have an awesome network. They're exciting to be around. Like they're very charismatic. They can convince you of like the optimal path often for them. So those are the three paths. So there's really no one that's prevented from doing it as long as you can get on one of those tracks. But each of those tracks, is really hard because venture capital in and of itself is, both science and art. Um, and so it's just, there's no one clear path to get there, I think.
Yeah, and that's a great thing about venture capital is that really, if you are suited for it, as in if you really want to do it, then you can actually do it. Like Boris says, if you're in the three buckets, if you can raise money and have people trust you with this money and really trust you for a long time, because when you're putting money into a venture capital firm, that's like 10 years, at least 5 years until you get something back. So you're having this long-term trust. So if you're the type of person who can maintain relationships with high net worth individuals, companies, or anything like that who invests in you, great. If you are someone who are a connector with founders, that's one of the most important things as well, because you've got to have that trust in founders, especially in SF. It's like everyone knows everyone. So they talk, and you want the A players to be referring the A player founders to you. And, that's why it's so, so important if you actually fit in these buckets. And if you really, really do want to do VC, then yeah, go for it. Could you talk about the structure of a large VC fund versus smaller ones? What job roles are there that smaller funds don't have?
Well, smaller funds, you typically get more responsibility even as a junior person. You just get paid a lot less and you have less upside oftentimes and carry. Um, and in larger firms, you tend to have more comp, more brand. You get invited to fancier parties, but you're more of a cog in the machine, right? You're unlikely to get a deal done as an associate, a senior associate, an analyst. Like it's possible, it's just unlikely. There's so many partners all jockeying for deals. So that's the trade-off. Experience on the ground in the battle versus growing through the process. Both are great. I would say on balance, most people, young people, are still choosing getting the fancy brand, the right comp, because they know they can then go to a smaller VC perhaps and impress them more. So there's a million ways to do this. The different roles are there's a much more expanded hierarchy, and the back office of large funds like compliance, all this stuff does add a weight to what you have to deal with, but you get more experience as these larger funds. So Smaller funds with less people tend to invest earlier, not always, but often. And so earlier investing means that you're leaning on the art and the network and the sourcing more than on the analysis and the financials and all of that. So it does also have sort of like two skill sets that you'll develop. Obviously, both do both, but in a different way, right? A younger VC can source pre-seed and seed and maybe some Series A, but it's harder because now as you get later stage, these CEOs are generating tens or hundreds of millions and they tend to gravitate more towards partners that can swing larger checks. So you just have to be like practical. Like, is a associate at a massive firm sourcing, Facebook's pre-IPO round? Like, maybe not. It's possible. It happens. It's just not really how the system is designed for them now.
Yeah, it seems like you guys are really data driven, and there's also a team of engineers and data science to a large extent. Is this common in larger VC funds, or is this Tribe's edge?
It's part of Tribe's Edge. Our edge, actually, it's definitely the people, but it's more the technology that we've built. So we've built our own quantitative modules and frameworks that are, we spent millions of dollars building it. It's more the system that's now built for anybody to use. But in the beginning days, we had a full-time R&D engineering team. Again, we spent millions. They were hard to recruit. They built some fascinating software. Today, larger venture firms do have data teams, but there's nothing that a handful of people can do that a machine can't do faster. And so we've really leaned into the machine learning and AI side of things. So it's a force multiplier. So it's absolutely our edge. I think we're the number one in being able to quantitatively analyze companies at any scale of VC. And I do think that we can share some of that wisdom with other venture firms. We work with other firms a lot, including their data teams. But yeah, I think the entire later stage part of this industry is becoming more data focused because it's converging with private equity, which has been finance data focused for a long time. And so that's just something that's been happening as companies have stayed private longer. You're now seeing venture firms do investments into $100 billion companies. That was the domain of PE or public markets, So the worlds are converging at the mid and late stages.
Yeah, and really VC firms also has to understand data to some extent because they got to help their founders as well. And one of the great things that Boris does and Tribe does is that they are also really data driven. They've actually like built these systems which would help founders, which would literally just give like a report of every single thing that's really happening, the full analysis of what you should do next, which investments you should particularly lean towards. So, what are your thoughts on AI VCs?
Well, there's a lot of thoughts to share on AI VCs. One, I don't think that's really a thing. I think that VCs are really good at branding. Again, there's a lot of art to this. And so as momentum shifts into AI and cloud compute, they're going to be the experts in that. As it shifts to blockchain, they're going to be the experts in that. Look, VCs have to be able to raise money on a narrative, right? And that narrative right now is like highly leveraged on AI. That's fine. We also invest in AI. Um, but at the end of the day, unless you've been doing this for like 12, 15 years and the neuroscience aspect of it, the decentralized, the compute side of things, you are journeyman, just like the rest of us learning about AI. What you're good at is sourcing and not analyzing, figuring out founders, seeing where there's product market fit, whatever, as a VC. And that's what you're good at. And AI is something that I think all of us are starting to understand better and better and better as it becomes more important. So I think a lot of the just AI investments that are happening, especially the consumer wrappers, some of them will do great, but there's too many for them all to succeed. So, tread with caution. And we're quite cautious in the sector, even though we've deployed. And, we've invested in XAI, we've invested in OpenAI. We want to build a big tent. We do see the need for multiple large language models competing with each other for both, alignment issues and for just competitive issues. So we're very large supporters of the AI trend, but we also still have our investment hat on. Still has to be a good investment. And I think some of that's being lost among this new narrative of quote unquote AI VC.
There's always new trends every single day, every single month. It's just like what do you focus on? And VCs, some of them are not really good at sticking to what they do best, but you guys really are. You guys really stick to DeFi. Talk about the trends that you're looking at right now, and also Tribe is looking at right now, and what do you see in the AI industry in the future?
Yeah, for sure. I mean, we are at the core, I think, enterprise infrastructure investors. We like to look at the end result of a product and work backwards to see where did it come from, right? Like a consumer app, people are saying is just a wrapper on OpenAI. OpenAI is, a wrapper on NVIDIA, NVIDIA on TSMC, whatever, right? At the end of the day, we want to understand each of those building blocks, what the market opportunity is in each of those, and then we want to break it apart into what are the investable components. And so we are looking at up and down the stack on machine learning and natural language and AI. We're looking at logistics. We're quite good at that because there's a lot of data to pick apart payments and enterprise fintech, healthcare technology, anywhere where there's a large amount of data, because our system can crunch it and analyze it quickly. Our team is trained on how to analyze that and read it. That's where our edge comes in. So we want you to be generating some revenue. On the other hand, we're also interested in decentralized compute, decentralized inference, and that breaks into sort of the more crypto side of the world. We like incentives and automated incentives and micropayments. Those are all real things. Step it outside of, is there a use case, is there not a use case? I just gave people like 7, okay, use cases. Not all of them are built well. Not all of them have winners yet. That's an opportunity for the audience here. Build something that's actually generating value, building value. That's what we're looking for in a broad spectrum of like, we're moving towards a world dominated by computers and by the automation that's driven by AI. You better harness that, even if you're not an AI company. If you can do that, then you fall within our mandate.
Yeah, and that's amazing edge about you guys is you guys are really more of a quantitative VC fund where it's like you guys know how to analyze the data. You've done it like so much times. You've built systems for it. And for our audience, the thing that you guys focused on, decentralizing protocols, basically what that means is that at first, these projects aim to be decentralized, which means that no single person or company controls them. At the beginning, they're not usually fully decentralized yet. So if Tribe gets early during the first investment round, could be seed, and then keep investing as the project grows and raise more money, then they can make tons and tons of money. So let's say based on all the past companies that you have invested in, if you could only choose between a token investment or an equity investment for all of them, what would it be?
Well, that's a hard one. I would say that in the recent past, an investment that I wish I had made, that I had the opportunity to make, that I didn't make, was Solana. We had access extremely early. We passed. I was down on crypto at the time. We still made a bunch of crypto investments. Some of them did fantastically well, but Solana has some thousand handles in front of it in terms of multiple. So that's fantastic. I think if you go back and you look at, the early investors of Facebook and Salesforce and some of these like absolute monsters, it's like super impressive that they saw that and they understood what could happen. Same with Airbnb. Those are good, quirky risks to take that I don't think were obvious at the time. Uber is another great example. But look, those opportunities, there's a handful every year. Like some companies being built right now today will be the best investment or one of the best investments in a decade. Um, Whenever it goes public or launches their protocol. So we just have to keep our eye to the grindstone and understand what it was we missed about that other company, try to build that into our pattern, and just stay consistent. Like, look, if the data says it, if the 3 criteria that I mentioned, the team, the go to market, the creativity is there, sometimes you can only see a little bit around the corner. You got to take in some cases a bit of a leap of faith if you have conviction.
So what would it be? Would it be like based on all your past
It would
investments?
be Solana, the protocol.
And I know that you guys For token investments, you guys usually go like earlier stages, and for equity, you guys go later stages. Is it what is the potential of an equity investment? Is there actually going to be like more than 10 um, amazing companies that will have such high net worth in the future, or what is your thoughts? Like, what are you thinking right now?
Well, every venture firm thinks about their portfolio, what is our loss ratio? What is just going to, what's the distribution of 1x returns because of our pref stack? We sit at the top of the stack if a company liquidates. But yeah, you need to have some big winners. In a fund like ours, which is, fund three was almost 400 million, you're going to need a big check to have a big return. We want every check to have the opportunity to be 10x or more. But that happens. I mean, look, if you invested in Nvidia when it was public already, I think you're in the hundreds of X. So companies grow on a power law, right? You got to understand that. You're not just going for the 2x or 3x. You're betting that these guys figure it out, then figure it out, then figure it out, then figure it out. 6 years later, it's 120x. It's returned 5 times the fund. That's what you're looking for. You're not going to get it every time. It's very hard, and luck plays a factor. So yes, I think our equity investments, the checks are larger and the multiples might be a little smaller because they're already taking out some of that early upside. And then crypto, because they have such short fuses before they go launch publicly, we go earlier. So pre-seed seed in crypto, ABC for equity. Sometimes, you get both. So, we can invest in anything provided we think it's a good opportunity.
Yeah, I know that you guys invested in great companies. You've invested in Kraken for Tribe. And could you share like some stories of meeting like the greatest founders in your portfolio and also why you chose them?
Well, often when we meet them, we don't know they're the greatest founders. And so you have to see that spark. And again, you just go back to the things that you're looking for. Are they focused? Are they gritty? Do they understand the market? Do they know the levers that pull the market? A great founder is not this like magic unicorn. It's the people that do that stuff and then are very clear communicators to the team in the market. That's a great founder. Some of them become famous, but that's different. That's, they also hit it at the right time. They like talking to the media. That's different. A great founder is someone who can build a business, understanding the building blocks that I just mentioned. So I often don't know that they're great founders. And, by the time they become, rich and famous, they're friends and colleagues. So it feels a little different. But yeah, sure. I'm amazed and in awe by, frankly, all of the people that have given up potentially lucrative careers to try to build something. And all these folks could get amazing jobs if they wanted to. They wanted to do this. So kudos to them because a lot of it doesn't work.
Yeah, and do you have any stories of maybe one or two of these companies?
Well, how about when we met? This is an interesting one. This protocol we invested in called Barachain. Um, Barachain is a very popular. It's called a layer one. They don't, when we met them, both the seed round that my partner invested in, and then later when I met them, they didn't give us their real names. When they went on panels, they would wear bear suits. Okay. Most people would look at that and be like, that's not investable. But if you sat down with them and you quizzed them and you understood, did they understand the market, the product, what people wanted, what developers wanted? They were incredible, like top 1%. And so you're sitting with this guy in a bear suit on a panel who I think is a top 0.1% smartest person in the game and in this sector. And so, looks can be deceiving. You have to understand your market. You also have to understand what their market is. They're marketing to developers who love this stuff, 23-year-old coders who are like, this is vibing for me. I get this stuff. So eyes, you can be very deceiving if you misunderstand what the end audience is looking for because you're not investing in everything that you're going to use. VCs that invest only in the products that they like to use, there's some of those folks. That's uncommon. So really got to put yourself in their shoes. And just that was like a fascinating story. We invested at very early stage, and again and again and again, it's worth multiple billion now. These guys are worth 9 figures. But I still remember when they were wearing bear suits. So the world is different, right? By the way, we don't only invest in founders wearing bear suits. There's a time and place for a real suit. You got to know your audience. But my point is, these folks can be quirky, and that doesn't take away from the fact that they can be top 0.1% founders. But millions of stories, most of which I probably can't share on video.
Yeah, that's so freaking amazing because most people think that, these founders would be just like people from high tech companies or the big companies, and then they would just have so much technical expertise from those big companies that they're gonna be hella successful. And some VCs really just like check off boxes, which you guys don't do. And this story of this guy in a bear suit who's just really 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 technical, it's like VC don't even understand the full extent of what the founder is saying, the full extent of the true market size that they're actually trying to go for. And really, they have to explain it to you guys. And, this guy in the bear suit, he's really, really technical. So it was probably like a more difficult process to explain it to you guys. But you guys were actually like really, really receptive in a way. You're like, okay, we're VCs who knows how to actually connect the dots. We know that this space has potential, and this guy, although he might be a little quirky, he has potential. And the way that you guys understand founders and really just like let them talk and let them tell you their story is just amazing. Um, so, in your perspective, would you say that being a founder is a necessary step before becoming a VC?
No, unless you take the third path I had laid out, which is being a successful founder, or honestly, an unsuccessful founder that learned a lot. I personally prefer investors that have operating experience. I cringe a bit when I hear people who have never run a company tell very successful founders on boards how to run their company. It's not that they can't have good ideas. It's just that their ideas are backed more, as third party experience looking at others versus doing. But everyone has different opinions. And not everyone can be a founder. Not like every single VC is or should be. Um, so yeah, I would recommend it, especially because it's so freaking easy to get started. You can just do things. Go do the things. And then once you do the things, you can be like, look at this thing I did. It taught me a lot. This is why I can help you be better as a founder, build the network, and then, go get your VC job. But honestly, um, I don't think, day one undergrad, freshman, sophomore year, you're like, I am going to become a VC after I graduate is the right mental path, even if it happens. I mean, the right mental path is I'm going to do something useful or know somebody useful or build a network that is then useful to founders. And that's different because remember, you can be a VC and just no access. And then, what's the point? No one's going to give you any money.
Yeah, and at the end of the day, it's really how much value you can provide to the VC firm, how much value can you provide to LPs if you're starting your own firm. For you, all the talented people out there, are you hiring for engineering talent, VC talent at Tribe?
Well, we're always sort of in this consistent hiring phase. We're always open to interviewing folks across any level of experience. They just, we're looking for remarkable people. Yes, we're looking for data science and computer science, but we're also looking for people that are a bit more business oriented. It's not like we're hiring in droves, but we are always looking at resumes.
And for our audience out there, if you're really talented, if you got data science, if you got really, really good networking skills, if you can bring money to the VC firm, heck, Tribe might be something that you could be interested in. And right now, VC is evolving very, very fast, and the industry is always changing. So, everyone is a serial learner. What is here to stay in the VC traditional model?
Well, I think that trying to reinvent the wheel across the board creates a lot of inconsistency, especially for founders. And so, my view of the venture industry is that it is going to remain a service industry that's technology enabled. In other words, at the end of the day, we're far from the time when our internal data models can source deals, structure deals, and invest in deals. And I think that is a future that's quite a bit, in the 5, 10, 15, 20, 25 years away, if not longer. There is a lot of art and science that goes in. Tribe is phenomenal at the science, and we're always looking for art to be brought in through talent. And so we're a service industry. Make sure that you do right by your clients, which are the LPs and the founders. Relationships matter, networks matter. Some of that can be automated. Not all of it can ever be automated away. So just remember where you stand and keep your ego in check. I think if you're a VC, because at the end of the day, we are interchangeable on money. It's everything else that counts. And people want to work with people that they don't hate being around for the long term. That's the fact.
Yeah. And like Boris says, it's really people wanting to work with people. So the traditional, VC model, most of it is here to say, like nothing is actually going to fail. Because in a way, it could be too big to fail. But at the essence of it, it's really just investing in great people. And, you know, how are you going to get like AI that, deciphers the human brain, which has like 8 billion neurons? It's almost impossible. So it's really the experience that you chat founders, the experience that you chat up VCs. You have to keep talking with them, really build that network. And then once you know where you can provide value, whether it's bringing in money, whether it's your connections with founders that trusts you, that is the best place to really find a role in VC. For our viewers who needs an actionable 6-month plan to implement right away, what would be your recommended plan to fully break into VC?
Oh, I mean, it's different for everybody. My 6-month plan is honestly build something. Like month 1, come up with an idea, test it against your friends. Month 2, build something, find mentors, make a startup, raise money, scale your business. That's months 4 through 12. Month 48, think about VC. But if you absolutely want to do it, and I think this is probably advice a lot of the people that you've interviewed before, it's build your network, and that's step 1. Build your profile, make sure your profile makes sense on all the various social media apps on LinkedIn. Go to the network of events with something that can add value. I don't care what it is. You'll work for free. You'll do this, that, the other thing. It doesn't matter. Once you've built out that network, and I would start by building a network of founders, not VCs, for sure. And then start putting out work product, whether that's analysis on social media or whether that's what you're doing with the podcast. Like create something where people can get a sense of who you are and why you're special. Um, and then I still say go get an operating role so you understand how businesses work. But build an edge. You're awesome at finance and Excel. You're awesome at sourcing and finding in deals. And then, honestly, there's nothing wrong with a bit of cold outreach. Go out there and hit up, especially when you're younger, hit up 100 funds, give them the strong story of why, add a tiny bit of value, and you'll get the interviews. Just make sure your personal brand and your credentials and your work product are not a mess. People will find it. Everyone Googles you. But honestly, go to a company first. That's my advice. I'm sticking to it.
Yeah. And some of the best ways to really just like break into VC is through the startup. Because if a VC firm has invested in a startup and you're in this process of scaling from 0 to like 1 and then to different stages of the company, and it's like what these founders are going across. And heck, you don't even have to be a founder. You just have to be in the team that is going through that entire process, that entire transition. Because scaling is a really, really huge barrier for entrepreneurs. And it's something that you wouldn't know and you wouldn't understand what the founders are going through unless you are actually in it. So like Boris says, right now, for even students, you can just build a project. Really, like VC should be something that you look back and then the dots really connect. It shouldn't be something that you just want to do. Like obviously it's great if you just want to do it right away and you're just working towards it. But if you really want to do that, become really, really niche in something that you do great, become like the master. Like Boris says, become the master of sourcing, become the master of fundraising. But the first step is really build your network. And that should be mostly with founders because that is where you can add value as a junior role. And when you keep adding value, keep building your network, that is when you start to break into more senior roles in VC. So yeah, that's why it's like VC can come from every single different path. And like Boris says, you really just have to show if a VC firm lacks something and you provide that thing, that is your in. Go and do a startup, join a startup, or build a project starting right now and follow Boris's 6-month plan. And heck, you'll be on your way to a VC career. For a few rapid fire questions to wrap up. Ready?
Shoot. Yep.
What is the best book you read recently?
Augustus by Adrian Goldsworthy. I love military history and ancient history, and I think there's a lot of interesting metaphors and parables that you can learn and apply today.
Yeah, and I used to read tons and tons of Roman, and my high school was, I think it was Boston Latin School, so we actually had to read it as it was a requirement. It was great. Like I freaking love reading Caesar and all of those books. If you could invest in any startup from the past, which one would it be? And you touch a
I'm
bit
gonna
on
stick with Solana,
that.
but there's so many. I mean, there's a lot. I've seen enough deals now that I've passed on that I shouldn't have. So it is what it is.
What is your favorite part of working in VC?
After we've invested, it's the one-on-ones with founders talking strategy. You feel like you're making an impact. You feel like you're learning from them. You can see your work product with the really good founders. They'll right away sort of implement some of your ideas. It's awesome.
Yeah, and that's the thing. It's like most VCs are serial learners just like you. So whenever they learn something new from a founder, they're just like, oh my gosh, this is something that, it's all I wanted. And if you add mentoring on top of that, that's like the double package right there. And lastly, what is your kill death ratio in Call of Duty right now?
Oh my God. I don't want to admit it. I'm not that great. We just switched from playing the big map to Resurgence, which is where you like can keep going. That's a lot more fun because there's a lot more action. I'm not that good. I do it more to hang with my buddies. I'm 38 now, so with 2 kids, it's harder to see them in person all the time. So it's awesome to be doing it over something we both enjoy. So I don't know. It's on a good season, it's maybe above 1x. I think Resurgence, I'm going to give myself 1.35.
Heck yeah. That was amazing, Boris. For anyone listening who wants to learn more about you or your firm, what is the best place to reach you?
Boris at tribecap.co.
Awesome. Out of everyone you know, who are 2 amazing VCs that you would recommend as future guests to our podcast?
Um, oh man. Well, there's two crypto VCs that I've been bugging a lot lately to do deals with. One is Josh Rosenthal from Polychain. Another is Rob Haddock from Dragonfly. Um, they're both awesome. Do multi-stage crypto. We're in a lot of deals together, especially with Polychain. So, do your best to get them. I think it would be great. They do a better job than I would.
Sounds amazing. And dude, you're just being humble at this point. Thank you again. And thank you to everyone who's listening. Comment a question you want to hear from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.